Second question is regarding the scenario in India. So I think it's the domestic production is not going to be ramping up as quickly as since it's just 5.5 gigawatts. So do you expect a transitionary slowdown in the solar demand in India as production tries to catch up with the supply?
I don't think there is going to be a letup in the demand for solar modules. The question is from where it will be met. And the second question is that we do have a manufacturing capacity of 14 gigawatts in the country, which is existing. So there is, I don't see that there's any possibility of any reduction in the demand for solar modules or the supply of solar modules in India.
In fact, just to add here, in fact, a lot of tenders have already been awarded and a lot of pipeline is already existing for the solar installations. Almost, I'm told, almost 75 gigawatt of pipeline exists in the country in order to make the installations in the next couple of years. So in terms of the installations, we see a significant rise. In fact, on the contrary to what your statement is, now in the case of module manufacturing capacity also, all the large players who have announced their plans are quickly adding up the capacities. So even the capacities would be considerable quantity of capacities would be added in next 1 year time. So there should be a significant increase in the activity of manufacturing and installation both.
Right, sir. And so if I could just squeeze in one last question, so where do you see solar glass prices in the next couple of quarters? Do you see them tapering off from 141 or do you see some kind of rise from here as well?
See, this is a very difficult question to answer. I simply cannot hazard any guess on this matter. Our prices are, dependent on the international prices. And what turn they will take is something which is purely speculative. So I would not like to hazard any guess on this.
Okay, sure, sir. Thank you so much for answering my question, sir.
Thank you. The next question is from the line of
questions on the next leg of growth. So our capacities, SG4 and SG5. Could you help us understand in terms of the financing or how would these be financed?
So SG4 we had planned to finance by way of equity and debt mix, and the right mix will be known in a couple of months. In terms of the equity raise, we do have plans to raise equity for SG4, and the exact amount will be known in few months, maybe after April. In terms of SG5, it is still away, so we will see whether the internal accruals would be sufficient, and we do not have to raise further equity for SG5.
Okay, got it. And in terms of export, there is a pattern of healthy mix of export growing in each quarter. Right now, closer to 26%. If you can throw some light in terms of medium term, how do you see this percentage spanning out from here on?
So we are confident to maintain this trend of about 28%, including the SEZ exports of solar glass. We could potentially increase the export even beyond this, but we have to balance out between the domestic requirement as well as the export market. Just for the information of the participants, the export markets are growing significantly, particularly in Europe, Turkey, and also USA. So there is a very much buoyancy in those markets in terms of requirement for glass, as the module manufacturing activity is significantly rising in those geographies. So we do have a good amount of growth prospects in those markets.
Great. And just connected question, in last call you alluded that export margins are slightly inferior to what we get in India. Is that still the trend, or do you see that improving given the demand is exploding outside India as well?
The margins are slightly lower, but they are not very abnormally placed in terms of the comparison. But we see that similar trend to continue for some time.
Okay, thank you. That's about from my end.
Thank you.
Thank you. The next question is from the line of Jinesh Sanghvi from Jinesh Sanghvi and Company. Please go ahead.
Yeah, hi sir. So couple of things. If you can share the volume numbers this quarter, because if I look at the sequential trend, we have seen the revenue growth of around 5%, wherein the realizations have grown by around 20%. So has there been a dip in terms of volumes this quarter, or is there some slowdown in terms of demand that has been seen in this quarter? If you can throw some light on that.
So practically there is no dip in the volume which is significant. In terms of the India's requirement, we have to actually we have to rather exclude a certain amount of sale which is not reached the customers. So there has been reversal of the sales to the tune of about 5 crores or so on cost basis, and that has led to this kind of situation. But on the volume front, we are flat out running full capacity and selling full capacity. As of 31st December 21, actually, if you look at the finished goods stock in the factory, it was virtually zero. So there is no problem from the demand side, and we continue to believe that the entire production can be sold without any difficulties. We actually have only about 35% market share in India, which also means that a lot of demand is available for us to service. We only have a constraint on the production side, which will be addressed after we expand the capacities to some extent.
Okay. So basically this 5 crore reversal on the cost side would kind of get accounted in the Q4 numbers. Is that right?
Practically, yes, provided there is no such kind of carry forward at the end of March, which generally we would like to avoid, but it all depends on the situation.
Yeah. And so last couple of other things. One, if you can share the current realizations of the solar glass prices, which is there. And on the new capacity, how fast can the new capacity ramp up post-commissioning?
So we already mentioned about the new capacity coming up in the Q2 of Fy23, which is July to September 22. So that quarter we'll see the production from current expansion coming up. In terms of the prices, we already said that there have been certain correction in the moderation in the prices. So to what extent exactly it will pan out for the entire quarter, we can't commit anything right now, but there is a small decline in the prices.
Okay. Sir, on the ramp up, just wanted to understand, can it be ramped up to 70-80% immediately, or it would take around 5 to 6 months to ramp up and stabilize the capacity?
Yeah, so in terms of the production, generally we like to operate the furnace at full capacity, more or less. But one can imagine that for initial couple of months, the capacity utilization could be a little lower, 85% or thereabouts. But in a couple of months, one can come to higher capacity. This we already displayed in expansion of SG2, where we could come up to higher capacity immediately in couple of months, 2 months or 3 months. So we like to operate it at optimum capacity.
Fine, sir. That was helpful. Thanks a lot, sir.
Thank you. The next question is from the line of Mohit from DAM Capital. Please go ahead.
Yeah. Thanks for the opportunity, sir. And congratulations on a very, very good set of numbers. So my question is, when you say that you are in talks with the new developers or new solar manufacturing capacities coming up, are you looking at some kind of volume tie-up, and will there be any price certainty also? And that's the first question.
Yeah, so in terms of how the prices work in the solar glass market, as you have seen, is based on the month-to-month contracts. It's not annual prices or like that. But generally speaking, the customers also expect the landed cost as a benchmark to be matched or in the same ballpark. So that's how it operates. But there are some large buyers who are also willing at tying up at some fixed price or some formula which is different than market prices. So it will all depend on how negotiation with each of these buyers take place finally, and based on that we will arrive at the pricing mechanism for for each of them. It may not be uniform mechanism. So whether it is cost plus basis or whether it is some standard price or or in most of the cases it will be market related price.
Sir, my second question is that given that the PLI scheme has been enlarged and the number which we're talking about maybe 25-30 gigawatt, is there any plan to ramp up the capacity more than 12.5 gigawatt, which is in the sales at this point of time?
At this time, I think we are just thinking of 12.5 gigawatts and no more, because there are other capacities which have been announced by different players in the country, and we'd like to see what happens with them. So for the time being, I think this is it.
Thirdly, what is the status of anti-dumping duty from the Chinese solar glass? I think expiring this fiscal year, right? Am I right in saying that?
Yes, it is coming to an end in July. We have already applied for an extension of the same because there is no change in the circumstance. They continue to dump. And so we are awaiting the result of our application.
So one more question, sir. Sir, given that our gas requirement, our gas requirement will go up, can you just let me know what is the demand requirement at 2,100 TPD? What is the gas requirement in MMSCMD terms? And are we procuring gas at spot markets? Is there any plan to tie up in slightly longer term, given that gas would be a significant cost item for us?
So we are not buying any significant amount of gas in the spot market. We hardly buy any quantity. We have long-term contracts or medium-term contracts with the GAIL Limited, and we are again negotiating with them for the expansion, that is SG3, and we should conclude the contract with them in the next couple of months. For SG4 and 5 also, we will similarly require the gas, which we would like to cover under certain contracts, which would be medium-term. But we restrict our buying in the spot market.
And with the pricing we link to crude plus some slope, is that the right assumption?
There are different basket or different benchmark contracts are available. Generally they are based on crude, but there are different indexes available like JKM or oil related or Henry Hub, which is the United States. So the different contracts are available. We have a mix of these so that we reduce the volatility.
What is the full requirement at 2,100 TPD, if I may know?
It could be closer to 3 lakh cubic meter per day.
Understood, sir. Thank you, sir, and thank you and best of luck. Thank you.
Thank you. The next question is from the line of Darshan Manik from La Consultancy. Please go ahead.
Hello, am I audible?
Yes, you are.
Yeah, congratulations on good set of number. Can you just brief about the EBITDA margins? Every quarter there is huge fluctuation in our margins. What is the specific reason for this?
So EBITDA margins are fluctuating largely because of mainly because of the selling prices. If you really look at the prices in the first quarter of this financial year, we had good prices, good set of numbers. And in the second quarter, the prices declined because the international prices dropped. So we had to, of course, align the prices to that level. And third quarter again, which is what we are discussing, again the prices have moved up, which is closer to the first quarter. So there have been significant upside, downside in these prices, which has impacted the EBITDA levels. And because this is a volume business and it is important the selling prices are very important in terms of the EBITDA numbers, this is impacting to a great extent.
Agreed, but there would be some range with which we would be working because our cost and everything is passed on. So beyond the point, we would not be looking to expand the margins. I mean, a certain range is fine, but even considering that the selling price is fixed for a month or so, overall in a year, our margins would be fixed somewhere in the range because at times your selling price would be increasing in another quarter, the cost would be increasing in another quarter, so quarterly margins can be here and there. But overall, in a year, the margin should not be very much here and there, if my understanding is right.
Actually, we do not have control on this kind of situation because the prices are depending on the landed prices of imports, and our buyers look at those prices. So when the prices are low and even though our costs are rising, it's not that the prices we can charge higher prices. I hope you understand what I say. And when the prices are rising internationally, there is no reason for us to charge lower prices because a similar thing has not happened when the prices were low and the costs were higher. So it all depends on how the prices are behaving in the international market. And in international market also, if you see, currently the costs are rising for all the solar glass manufacturers, even though the prices are moderating. So it is not having any direct relationship, so to say. It is more to do with the demand supply, the inventories and all those facts which are also largely connected to the Chinese manufacturers, so to say. So you are right that there will be some ballpark number, but there is no control over that number from our side.
So on the higher side, what would be the margin? I mean, it won't be that we would be charging any XYZ amount. So on the higher side, what can be the margin expected, and on the lower side, what will be the margin which will be protecting at any cost?
I think this question cannot be replied to your satisfaction probably because prices have moved by 70% up also, and prices have moved 70% down also. So you really can't have any ballpark number for what could be the band within which the higher margin or lower margin will work. So obviously the overseas sellers also will
a loss, right?
Sorry?
We won't be selling our products at a loss. There would be something cost plus percentage which at least we would be expecting when we are selling.
I was about to say that the overseas manufacturers also are listed companies, and though they also report their numbers on quarterly basis, and they also have certain costs based on which they price. So obviously they will not like to sell below cost. Similarly, we will also not like to sell below cost.
Okay, fine. Thank you. That's it from my side.
Thank you.
Thank you. Before we take the next question, I would like to remind all participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Sharon, an individual investor. Please go ahead.
Thanks for the opportunity. Just would like to know, already there is a discussion or news around solar glass recycle. So in terms of that, from that perspective, do you have any plan for that, like in future? Any opportunities for Borosil?
At the moment, there is no established process for recycling of solar glass in any significant volume. So far it's a very time-consuming and fastidious process to be followed because all the plastic parts have to be separated which are stuck to the glass. So far we are not aware of any proper recycling.
Also, the volumes in the country are very, very low. The installations in the country have picked up only last 4 or 5 years. So when the significant volume is there and the year-end life cycle of the modules is over after 25 years or so, the recycling will start at that point in time. So it is still some time away, maybe 15 years away or 10 years away from now, when the recycling will happen in a meaningful way. And by that time, we can expect that some technology of a right economics will come into play, which will be of interest. That time we will think about it.
Having said that, we are keeping our eyes and ears open, and there are certain technologies that we are looking at with interest.
Okay, yeah, thanks. And the SG4 and 5 that will be planned in the existing land, right? Those are brownfield.
Yes.
And for any, let's say, considering there is a huge plan of government by 2017, now they are talking about everything in renewable energy. So do you have already anything planned for buying more land for additional capacity, or beyond SG5 also still you have place for additional capacity in the existing land? What is that?
I think SG5 would take up the existing land, but we might be able to acquire still more land. But that's really going so far into the future that any speculation on that is not very meaningful.
And also we continue to evaluate whether to expand, continuously expand in the same location, or whether we should also explore any other location in India or elsewhere in terms of our being, de-risking ourselves from the single location point of view. So we'll keep evaluating all those aspects and take appropriate call.
Okay. Last question. Apart from glass in the solar place, any other components or any other technology you are thinking of, what is that, wiper or something, any other technology or product you are planning to come up with in future?
In Borosil Renewables Limited, at this moment, there's nothing other than solar glass.
Sure. And sorry for asking one more question. So just would like to know, after the Borosil Limited and the Borosil Renewable restructuring and demerger process, would like to clarify one thing is there directly or indirectly anything still with Borosil Limited, or it's completely a separate and there is no value relation between both?
There is no relation between the two companies except the promoters are same, and they continue to hold majority, and on the board the promoters are there. The total management and everything is different, and shareholding wise there is no close relationship. There are no meaningful related party transactions, so to say.
Sure, sir. Thank you very much, sir.
Thank you.
And all the best for the future.
Thank you.
Thank you. The next question is from the line of Sameer Gandhi from Greenergy Sustainables. Please go ahead.
Am I audible?
Yes.
Yeah. Sir, who will be our top 3 competitors for the manufacturing of the solar glass in India? Second thing, who are the top 5 customers by turnover?
Well, the answer to the first question is not possible for us to give, because so far nobody has come up. So first of all, the person has to come up, he has to be established and become a force in the market, then we can say. So that is one thing, and the second thing is confidential information. I'm sorry, we cannot pass that on to you.
Okay. Sir, in manufacturing these glasses, how much percentage of the raw material is imported? And are you facing any issues in procuring that, looking at the logistic problems which we have faced in last 6 months?
So bulk of the material is all being sourced domestically. Just some things which are trace chemicals are sometimes imported. But I think I would say more than 99%, more than 99.5% of materials are imported domestically, are available domestically.
Next question is that, sir, panel manufacturers generally do 10% of 10 years of the warranty for the glass or any mechanical part of the solar panel. Whether same warranty is extended by the Borosil to the OEM, and if so, then how much percentage of the warranty claims are there for last quarter or last year?
I don't believe we have received any claims so far.
So
sometimes we do, but there is it's not a question of a delayed claim. By and large, if there's a problem, it happens on the spot, and then we deal with the claim as it happens.
Just to explain to you, the warranty is actually given by the module manufacturer to the developer or the buyer, because he is getting the module certified and he is certifying that so much of output will be there. Glass is only one of the component which is fitted into the modules or on which the module is being made. And to that extent, the fluctuation in the power output from the module can be associated with many products which are other than glass. So in terms of our product supply, we only supply the glass to the specification which are agreed with the buyer, and there are no further guarantees. Yes, if there is a breakage or if there is a quality claim, we of course settle the quality claim or breakage in the glass to the satisfaction of the buyer, but there is no warranty for 10 years or 25 years from the perspective of glass supply.
Okay. One more thing, that if safeguard duties are not continued beyond the July, then what will be the kind of margin you are expecting?
You mean the anti-dumping duty on glass?
Yeah.
So in a meaningful way, the imports are coming from now Malaysia and Vietnam, less are from China, and to a certain extent, of course, the imports come from China. But if the duty is not extended, the imports from China may rise, and that can, of course, affect our ability to command certain price. To what extent it will happen and whether it will happen or not is hypothetical as of now, because we believe that we have a good case to get the anti-dumping duty extended for a second term. But should it not happen for some reason, then there will be definitely some amount of setback in the prices.
So, sir, in such a scenario, do you feel that completely depending on only one product like solar panel glass is slightly what we call as difficult for companies to plan for the long future?
Yeah, we believe that this is a good product where the government is completely focused on solar renewables and solar energy, where the demand is going to rise significantly. And we have been trying to achieve economies of scale by expanding our capacity in order to become more and more competitive. So in terms of innovations, in terms of whether raw material cost or whether energy cost, we have been trying to economize on all fronts so that our costs are under control. So despite all these uncertainties, what you have mentioned about the discontinuance of duty and all, we believe that the margin which we can achieve from this business is quite satisfactory, and that's the reason we continue to remain invested, and we will continue to be investing more money into this business.
Sir, in DCR panels, sales and manufacturing is supposed to be in India, and mostly DCR panels are made compulsory, as you say. So whether in DCR panels, glass is also made compulsory to be manufactured in India?
No, glass unfortunately has never been a part of DCR, or DCR is only on the module and solar cell. Similarly, the BCD which has come, or basic custom duty which has come, is also on solar module and solar cells only. Glass, like any other component of solar module, is left out for whether it is to be sourced locally or imported. But we produce a competitive product and price it competitively. We believe that once the expansion of the demand is taking place by way of increase in the module manufacturing activity, the scale will rise for us and other component manufacturers also, and the demand itself will actually ensure that we earn good margins.
Okay, sir. Thank you. And last question, are you yourself using some solar power for your factory?
We do have a wind power which we had installed some years back, and now we are going to set up solar and wind hybrid project which will be commissioned in the coming financial year. So we will probably shift to close to 25 to 30% of power from our own renewable sources in the forthcoming future, maybe after October 22 or so. And I think that is the maximum allowed as per the policy. So though we wish that we can consume more power from renewables, but there are policy restrictions due to which we will have to be satisfied with that.
Okay, sir. Best luck for future, and thanks for giving me an opportunity.
Thank you.
Thank you. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. Sir, as you mentioned in your opening commentary that currently the glass prices have came down globally, particularly in China. So assuming the price remained same for the quarter, and with the current prices of raw material which is there right now, how much impact we can see on the margin?
See, the impact of raw material prices, as I had mentioned earlier, in the quarter January to March, it will not be significant because our earlier contracts of soda ash are still balanced, and the increase will be marginal in that sense. So from the perspective of any meaningful or significant contraction in the margins, we don't foresee a significant drop, but there will be some impact. And on the selling price also, there will be certain amount of impact, which I already mentioned that prices are fluctuating almost every 10 days. So we cannot have a certain sense that by end of March, what will be the net realization, which will be whether plus or minus or how much minus.
So what is the reason for such a volatility in the prices? As you said, it is fluctuating every 10 days.
Basically, what we believe is that the Chinese manufacturers or the Chinese-owned companies which are set up in other geographies like Malaysia and Vietnam, they all operate based on certain comfort of keeping inventories and certain level of infrastructure where they have to keep the inventories. And in case the inventories rise beyond control, they try to liquidate the stocks at a lesser price, which creates a repulse in the market in terms of the price fluctuation. And of course, the expansion plans of those companies or the demand-supply situation could be additional features why this stock is fluctuating like this. And this whole demand-supply scenario in nutshell, why the prices fluctuate so much.
Okay, and so lastly, what could be the peak that you are comfortable with, by the time our SG5 commence?
As an internal policy of the company or the management, we would like to restrict our debt to 2 times of EBITDA.
Okay, and so lastly, what is the contribution of the thinner glass or bifacial glass from the overall revenue?
So when you say thinner glass, we call thinner glasses 2 mm, 2.5 and 2.8 mm, which comprise of nearly 30% of our portfolio. Whether it goes in the conventional or bifacial module, we are not much controlling that, but this is a thinner glass portfolio which is at 30%. And the share of 2 mm is going to go up in this, or it is going to be more than 30% going forward because the thinner glass demand is going up.
So it commands the higher prices also, or the prices remain same?
Yes, it has a better per millimeter price, per square meter price, because the output is also slightly impacted in terms of the yield, and the cost with that becomes little higher. So but still the margins are relatively better in the thinner glass.
Okay. Thank you so much.
Mr. Dhiral, does that answer your question?
Yes. Thank you so much.
Thank you. The next question is from the line of Divesh from DS Investment. Please go ahead.
Yeah, hi. Thank you for the follow-up. Just wanted to get some sense on the cost part, right? Because once we have SG3 coming up, which is more than doubling the capacity, could you help us understand in terms of operational efficiency or any internal metric like cost per ton or something, how you see that improving? And if you were to sort of take it a little longer term when all the duties don't exist, do you have a sense that we are getting to a more steady state level playing field against Chinese or those players? Just qualitative, quantitative, any thoughts would be helpful.
So in terms of the expansions, we will certainly accrue certain economies of scale because the overheads and the wage cost, which will be spread over the larger production, will definitely help us to expand our margins, EBITDA margins. Whether it will be 2% or 3% or 4% that we have to see, but one can say between 2 to 4% accretion in the margins could take place on account of this scale. I think one should look at that. And what was your another question?
Yeah, so just if you were to zoom out little longer term horizon, and I know that this is little hypothetical, but if you're comfortable answering, say these anti-dumping duty and all those world, Eventually, when we have LG3, 4, 5 in place, would be competitive in terms of cost compared to global players and things. Just wanted to get in terms of competitive.
So your line is not very much audible.
Okay, I'll try to join back in.
Yeah.
Thank you. The next question is from the line of Tariq Hussain from Gringotts Capital. Please go ahead.
Hi, thank you for the opportunity. I just have one question. So we have seen demand for bifacial modules increasing in China and other places. I just wanted to get a sense if you see the same demand in India and how is it impacting the demand scenario at your end?
So in India, so far, there was no much demand for the bifacial or thinner glass of 2 millimeter, but it is now catching up, and all the large manufacturers in India, maybe 10 of them are there, large manufacturers. Everybody is talking of big size modules, which are currently in fashion, and also the thinner glass. So we believe that we will soon catch up on the bifacial module trend. To what extent it will penetrate, we have to see in the next 1 or 2 years. But the demand for the thinner glass and larger size and for bifacial module is going to grow significantly worldwide, and India will also be in the similar league.
Okay, thank you. That's it from me. All the best for the next quarter. Thank you.
Thank you. The next question is from the line of Anuj Upadhyay from HDFC Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Sorry, sir, I joined a bit late, so you probably would have answered this question, but still I want to have a clarification. One thing, sir, could you just mention what kind of premium does 2mm glass have compared to the other thicker glass module over here? You also mentioned that the margin across the 2mm glass is much better. So if you can just give a ballpark figure, of the premium which it has over the conventional one.
So in the Indian context, the 2 millimeter glass demand is not virtually not there as of now. It has just started, and how it will be priced, we will see as we go along. But in terms of the international markets, the prices are higher by close to 25 to 30% compared to the normal 3.2 millimeter glass on 1 millimeter 1 square meter basis. So, and the cost is also higher compared to manufacturing 3.2. So margins are better. What exactly is the number? I cannot really talk to you on this line. But the profitability in making thinner glass is definitely better.
Okay, fair point, sir. But do we export 2mm as on date?
Yeah, we do export 2 millimeter.
Okay, and you mentioned that probably it could be in the range of 20 to 25% of our total portfolio. Or
that also includes 2.5 millimeter and 2.8 millimeter. A significant amount of this thinner glass portfolio, what we have is 2.8 millimeter, and that goes, all of it is going in domestic market. So from the perspective of what is the share of 2 millimeter and what is the export, so that is not very high. It may be about a couple of percentage, 3-4%.
Fair enough, sir. And you mentioned that this could go closer to 30% going ahead, considering the international and domestic demand.
Yes, that's what the projections by various agencies show, that bifacial modules will cross 30% of the overall installation. It has already happened in China, and it is also catching up in India and other geographies, including, say, USA and Europe.
Got it. Got it, sir. And lastly, sir, just a follow-up on the PLI scheme. Now we are seeing, many local manufacturers are now planning to extend their existing capacity, and also many new players who have planned up a huge capacity in the solar manufacturing. So, can just throw some highlight whether they would be manufacturing the glasses as well, or it's only a particular equipment, that is the wafer cells and modules, is what these guys are targeting. The reason I'm asking, if they are not venturing into the glass side, that probably would be a much higher beneficiary to this scheme. So just a clarification on this thing.
So it is entirely at the discretion of each of the manufacturer to set up and integrate or do the backward integration to the extent they will like to. But generally speaking, in the Chinese market or other international markets, the glass production has been with a different set of people, and module and cell manufacturing has been with a different set. But in India, some people have taken that kind of call to produce solar glass also internally, more particularly because the significant capacity is not available in India. The market is not mature to that extent as in China, and also they would like to restrict or like to rather ensure that their supply chain is not disrupted because of the dependence on the imports and all these the geopolitical situations. So they have taken a call to install certain capacity for their captive consumption. Now, whether one will do or everybody will do is for every individual company to make that kind of decision. What we know is that only 2 companies have so far discussed this kind of situation. The rest of the people are still looking at glass suppliers for the glass supplies.
Fair enough, sir. That's helpful. Thank you.
Yeah.
Thank you. The next question is from the line of Dhruv Kashyap, an individual investor. Please go ahead.
Yeah, good afternoon, Pradeep, and let me begin by thanking you for the excellent stewardship that you provided to the group over the last few years, and especially in these tough times. So thanks a lot for that.
Thank you.
My first question to you, sir, is that just looking at the landscape in terms of its opportunities and threats, everybody as their grandfather is talking solar and investing in solar and getting into solar. But if I was to flip that around and look at it from a threat perception, especially as bigger and bigger conglomerates get into the entire chain, would not too many people start sort of fully integrating, putting up their own glass units over a period of time, because some of these guys would be big? They could also start arm twisting the government in terms of saying that we need a lot more glass than is being manufactured, so remove any kind of protection and let us buy from outside, which will be harmful to us. And thirdly, also that as we know that while 25 and 40 BCD and all is on the module, etc., but on the glass, other than the countervailing duty of 9% from Malaysia and maybe a bit from China, even from Vietnam, we are not protected. So is there, I'm just trying to, play devil's advocate, that is there a cause for significant concern in terms of our growth prospects as a glass manufacturer, although solar will be booming in the future?
Very simple on that. You see, until the 9th of March 2021, there was no kind of duty or tariff barrier on the entry of solar glass from Malaysia. Malaysia has a large production of solar glass, and they could easily service a lot of the requirement of the Indian manufacturers as and when required. And when they were there, without any, their goods were sort of entering the country without any hindrance. We posted our most interesting result. That was for the quarter ended March 2021, which, if you notice, we did well in that quarter. So the fact is that while, the question of competition is